The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And our stock of the day is Boss Energy, the uranium miner, seeing a strong September quarter. It had recorded drum production of nearly 400,000 pounds of uranium at a cash cost of $34 a pound. The company's saying it's on track to meet 2026 guidance of 1.6 million pounds. Now, this comes as shares of Cameco, one of the largest global providers of uranium, rose more than 20% overnight after it and Brookfield Asset Management announced a partnership agreement with the US government to help build nuclear reactors in the United States. Under that deal, the US government will arrange financing and facilitate the permitting and approvals of at least $80 billion worth of new Westinghouse nuclear reactors in the US. And as a result, we've seen the broader uranium market on a fly today. So, Henry, what are your thoughts, and more specifically with Boss?
Well, Boss has been an interesting ride, I have to say, for a lot of shareholders. The honeymoon was well and truly over in July when it came out with a revised forecast for production, which slammed the market, and it caused a massive fall in the stock price. It had been cruising on the uranium scene theme at around $4. It crashed down to $1.85, and it has been milling about ever since, depending on whether we're optimistic or pessimistic about the uranium space. We do have some presentation out at the moment, so that is good. That has certainly helped the stock today, as has that deal with in the US with Cameco, which is interesting because the Cameco, of course, is a Canadian company. So the US relying on Canadian uranium production to some extent, but they did have a record quarter of drum production. They do have, they're on track to meet FY26 guidance, but that guidance was very much curtailed and cut back. They've got a good balance sheet, $212 million in cash, no debt. They're obviously very much geared to the uranium price and story. What is interesting is the amount of Boss that is actually shorted, and this leads to extraordinary volatility. And of course, the shorts seized on the stock back in July when we came out with the honeymoon is over, a sub-editor's dream in terms of headlines. There are currently 22.6% of the stock shorted. That is colossal. That is the biggest short in the market. So you do get these violent moves up, and we're seeing that today. 93, nearly 94 million shares shorted. This runs a few days late, but I'm sure some will be covering today. It's not my preferred uranium exposure, although it is not a bad way to play uranium. Paladin has been my exposure, and also Lotus Resources in a smaller cap with an African project which is starting to come into production. So Paladin being the big boy, I guess, to some extent. But Boss, well, if you can see the uranium price continuing to push ahead and this theme in America continuing to play out, which it looks like it will do, this could be a good way to play it. But you are going to have to put up with some volatility, and it is the most shorted stock in the market. There is reasons for that. It has disappointed, but if it can beat guidance, if it can beat expectations, we could see this one higher. So at the moment, it's a hold from me, given the rise today, and it has sort of got to $2.10 and then fallen back over. It is a hold, but it does have potential, and the next set of numbers I think will be crucial.
Andrew, would you follow suit?
Yeah, I agree. I think it's a hold, and I didn't realise that how highly shorted it was. I was just having a quick look as Henry was speaking, and that's extraordinary. And that speaks to one of the reasons why it's potentially kicking up today, because people are covering those shorts. So I note that the uranium price is at a 15-month high. And for all the reasons that Henry just put forward before, again, I'm a boring type of guy, so I think it's a hold. But if you have got that tolerance for that volatility, I mean, it's down 45% for the year, up 30% per annum for 5 years. So that speaks to that volatility. So if you're into volatility, all the moons are aligning relating to rising short interest and so forth. But if that uranium price continues to kick up, then there's going to be a lot more volatility, and that could play to your hand. But for me, it's a hold.
That is a double hold for our stock of the day, Boss Energy.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.